So this 1% decline, Isha, that you're talking about in China is particularly only for steel demand, right?
China steel demand, correct.
China steel demand. All right, got that. We actually have Amit Dixit, the Director Institutional Equities at Edelweiss, also joining in. So let's get his view in. Amit, one big factor, I think, what hit demand was the semiconductor shortage, especially in sectors like autos. That resulted in OEMs cutting down production and thereby, hitting steel demand. But tell us, what are the big triggers for 2022 purely in terms of steel demand, and what kind of growth rates are you expecting to see?
Yeah, hi Sonia. So what we believe that unfortunately this year, the on demand side, we were subpar, I would say. I mean, people expected demand to grow much higher. But as the year went by, particularly hit by, COVID-related factors in Q1 and followed by the seasonal weakness in Q2. And then Q3, the most peculiar thing is that demand even didn't pick up in Q3. And therefore, we had, while, on the face of it, you might see that demand has grown because the base year was low. But in absolute sense, we still don't see demand reaching the level of 2019 or thereabout. So clearly, the factor that we are all waiting for is the uptick in demand. And that is something that is only lacuna in terms of in Indian steel sector as of now. That is how I see it. Semiconductor shortage, well, it impacts auto. That is one part of the story. Just around 22% of demand comes from there. The more prevalent factor is infrastructure. While, to be honest, we have seen that there has been a little bit of an uptick, as evident in the prices of rebars that have stabilized in a better manner compared to HRC. However, if you look at it in terms of, the demand is showing all over in terms of prices. So Indian prices, if I talk about export prices, they are currently the lowest in the world, mainly because everybody wants to export because domestic demand is just not up to the mark. So we will wait for demand to pick up, and we are hopeful that Q4 traditionally is pretty strong. So we hope that, there would be a positive impact in terms of demand.
Amit, hi, morning, Surabhi. I was just actually coming to this, and I remember all the conversations we've had right through, September, October, when Indian companies were enjoying, fantastic spreads, right? We've all seen those bumper quarters from a Tata Steel, from a JSW. The question is, as you look at the second half of the current year, getting into FY23, are those high spreads a thing of the past? How do you expect profitability to shape up? Because it was that high profitability that allowed these companies to deleverage. So now, next 6 months, what are we looking at?
Well, I would like to be a little bit poetic over here. Fairy tales, typically dreams don't last forever. But the kind of spreads that we are seeing now, by no sense they are bad. If you leave alone these spreads that companies enjoyed in Q1, Q2, I mean, then the spreads still would be healthier than what we have seen in the past. So it's not that, suddenly you will find that spreads will come crashing down. Q3 and Q4, particularly Q3 would be a different thing though, because in Q3 coking coal prices are, quite high, and they would show in the P&L. Similarly, in Q4, they remain quite stable. So while definitely I take your point that, spreads would contract, but, there are two factors that I would like to point over here. One is that, these spreads are higher, as I said, compared to the past. And the second is that the companies are in much better leverage position than they were. So essentially, the percolation to PAT would be much better than what we have seen in the past.
Okay. Isha, come in on, the pricing situation. What do you see as the prices for steel on an average? How could it trend in 2022?
Yeah. So, see, 2021, the global steel price rally was essentially led by healthy double-digit demand growth in the first half of the year and decarbonization policies which continue to shock supply through the year. Prices started cooling in H2. We all saw, they started softening as demand weaned, but for the entire year, you will still see prices hover somewhere at around $865 per ton, which is way higher than long period average for the sector. Now, as we enter 2022, the first quarter, that is Jan to March, will continue to be clouded by the upcoming Beijing Olympics, in lieu of which there have been 30% production supply cuts for steel sector already announced, and B, the yet another wave of pandemic. So this a mix of both would essentially keep prices elevated through Q1. But as you enter from the March-April period, we will see supply coming back and demand continue to be muted, and therefore we will see steel prices correct. So if I have to put a number to it, we will see steel prices, global steel price, that is China FOB, over somewhere around $730 to $750 per ton, which is a correction of nearly 12-13% over 2021. So that's on the global part. Now back home, domestic prices have followed suit, although I would say the price hikes domestically have been lagging behind the global prices, and therefore we saw prices correct early on in global markets, and India saw prices correcting only in last few weeks.
Okay.
So domestic steel, flat steel prices, I believe, will correct by 10% in the calendar year 2022 to hover at 55,000-56,000 rupees per ton.
Okay.
In comparison to 63,000 in the current year.
Isha and Amit, we've spent a lot of time discussing steel since we have both of you with us. I very quickly want to ask you folks about metals beyond steel. If you're talking about the base metals complex, this year was all about aluminum shortage and, copper sort of supply crunch, etc. 2022, which is the one base metal or two base metals maybe that we really need to watch out for purely from a pricing action standpoint, demand standpoint? Isha?
Yeah. So the first would definitely be copper. And it would be led by the greenification agenda. It just fits well in the entire green drive. So, and copper prices have been continuing to do well, upwards of $10,000 also through the year.
Okay.
So I believe that copper would be the first one, followed by a lot of other new battery metals, maybe not in 2022 for India, but globally you will see some of the other battery metals also continue to do well.
Okay, fantastic. We'll watch out for that. Amit, same question to you. Base metals, 2022.
I would discuss the metals that are more relevant for India, because unfortunately we don't have any copper play. I mean, we have Hindustan Copper, of course, but that's not a very large player. So I would watch out for aluminium. Definitely, goes well with the EV theme, goes well with the light weighing that we have been seeing, and of course the supply cuts in China and the kind of production constraints that are there. Aluminium is, mind you, a very high emission intensity product, so that we would see market to be tight. So clearly, aluminium is one metal to play on. We are not very excited about zinc, to be honest. So this is the one negative thing, because we believe that with mining coming to fore, particularly after COVID, we would see zinc supply situation getting better. I would like to add one metal here, nickel, which is the much ignored metal, but very relevant for some of these stainless steel players. So nickel prices we expect to be high, just because good nickel deposits are just nowhere to be found in the world. So watch out for nickel, watch out for aluminium, and I would say that zinc might just cool off in 2020.
Okay, all right. Amit, Isha, thank you so much for joining us and talking about the metal space. Very helpful and a lot of analysis. Have a great new year, you guys. Hope you stay safe till we speak again. But since it's the end of the year, we've decided to take stock of the big wealth creators of the year. And one theme that played out quite beautifully was the rapid electrification of vehicles. Although there's still a long time to go, the data shows that there's been a growth of over 140% in the sale of electric vehicle four-wheelers and a growth of 400% year-on-year in the sale of electric vehicle two-wheelers. Now, one big beneficiary of this is JBM Auto. They do a lot of work in the electric vehicle